I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, let's go unfiltered. What's on the top of your mind?
What's on the top of my mind is basically that we're going into earnings season, and there's this never-ending, well, what is the earnings season going to be like? And I say what we should be thinking about is more holistically. Look at American Express. Gigantic buyback announced, big boost in the dividend. You may think that American Express may not do the right number, but they'll be in there buying stock. And I think that that is the story of earnings. And people have to start recognizing it's not just earnings that control a stock price. There's much more to it. And I want to emphasize that because right now there's the only stock that it's at its 52-week low on the New York stock, or the S&P, is FedEx. And that is a story that is basically, I think, controlled by the government, so to speak. But American Express is controlled by American Express. So let's start thinking a little more about what else you get when you buy a stock. It's not just earnings per share.
I'm glad that you mentioned that because in a recent Real Money column, you noted that stocks such as Netflix, J&J, Facebook, they are not trading on EPS.
Right. And
so what's happening there?
Well, I just think that what you're seeing is a lot of different metrics, and a lot of this has to do with the fact that there's just ETFization, that you'll have a stock that trades off of about signups, like Netflix, and then what we'll look at is Disney, we'll look at Roku, and suddenly you have this whole cohort that's trading on signups. I want it to be traded on earnings, and I want it to be traded on the holistic approach of buyback and of dividend, and because they're a truer picture of what you get. Now that means you're not going to catch an Amazon or a Netflix, but not everyone should. There was a guy I was going up with in the elevator today. He was waiting to see me. Nice man. He's 56, and he was saying, should I be more aggressive? Should I be looking at this? I'm doing quite well. And what he does is own a pastiche of dividend-paying stocks. And I said, no, you're doing it right. So suitability means that you should own American Express if you're my age. If you're younger, you can certainly buy something with a bizarre metric. But remember, a bizarre metric means that it's very subjective what the stock does. And I like more objectivity than subjectivity.
Now, our Real Money stock of the day today is Nike. They are scheduled to report earnings after the bell. Jim,
the next couple quarters bad. Bad because people find chinks. I think Nike America's going to be good, Nike Europe's going to be good, and Nike China's going to be good. Nike's been just marking time, waiting for a true breakout quarter. We don't have a trade agreement, which may make it so that people say, we have to wait for a trade agreement, but I think the fundamentals will be quite good.
So the fundamentals will be good. Should investors be worried about China, though, with all these trade headlines?
You know, Nike's been a winner in China. Nike's kind of like Starbucks. The Ministry of Sport likes Nike. That matters. I'm not as worried as others. It is a stock that you could buy half now, half later, because if you ever do get a China deal, it goes right to 100.
So half now, meaning before earnings.
Before the earnings.
And
right.
when later? Do you have any idea?
Well, I mean, if the stock gets hammered, it's been a huge buy at 82. So if it doesn't, you buy half, the worst that happens is it goes straight up without you. Otherwise, it's been just a constant 80, 88, 82, 88, 82. And that's because the forces of no deal tend to overwhelm the forces of deal. And I have a Real Money piece today that talks about how ridiculous things have gotten with trade, where they're letting Bozeman dictate it. So just be aware that trade is chaotic. So don't make your decisions based on trade, even though many people do.
So guys, head on over to realmoney.com to read both of Jim's pieces, the one on China and the one on why you should be wary of stocks that don't trade on EPS. And of course, for everything that you need to know about Nike heading into the earnings today. Jim, I do want to stick with athletics, but I want to switch over to football because we've got a fantasy football show right after this.
Just one thing. The health of this market is defined by Walmart. More than 100 million shoppers. Look at that stock. People very much want to say that there is an end here. That things are tougher than people think. Look at Walmart.
Take a look at Walmart.
Walmart. These are signs. Forget the canary in the coal mine. These are signs of goodness.
All right. So right after this, we're going to do our Action Alerts Plus video, and then we're heading back to the studio to film Bull Market Fantasy. Why should I tune in today?
There's a critical weekend. A lot of players hurt. We're beginning to really see who's real and who's not. I have always felt the first two games are preseason. This was game one of the real season. And so you're going to have to tune in with me and Bill and you. And you may have to do a lot of roster changes. We're going to talk very seriously also about the implications of different moves. And then, of course, how to deal with loss. And what it means to deal with loss, to be in the here and now, and to be mindful of it.
All right, that sounds like a solid show. I'm looking forward to it. All right, guys, if you're watching on TheStreet.com or on Facebook, we are now heading over to our Action Alerts Plus Daily Rundown Show over on ActionAlertsPlus.com. And at 10:45, tune in at BullMarketFantasy.com to watch our live show there. I'm Catherine Ross, and I'll see you tomorrow.